The recent news is that Germany's economy is doing really badly, but how is this affecting Europe? I'm a little worried I'm doing too many Germany videos, but this isn't about Germany's economy per se, it's about how Germany's affecting the European economy as a whole. So it's also a European economy video. So I have this article up from the New York Times, and it's Germany has powered Europe's economy. What happens when its engine stalls? During the height of the Euro crisis, when most European economies were doing badly, Germany's economy was powering along doing pretty good. I mean, there were like 2 quarters to a year when Germany was doing bad, but for like a longer period, the rest of Europe was doing bad, but Germany was doing pretty good. And then Europe recovered a little bit, along with Germany, but now Germany's doing bad, again, and what effect is it having on Europe? So let's continue to read the article. When a debt crisis slammed the Eurozone nearly a decade ago, Germany's powerhouse economy helped lift troubled neighbors like Greece, Portugal, and Spain above the turmoil. The question that Europe faces now is whether those countries are strong enough to return the favor. We'll see. Germany is on the brink of recession after its economy declined in the year's second quarter. Spain, by the comparison, is experiencing brisk growth, and even Portuguese and Greek economies are expanding. Buoyed by tourism, booming construction, and steady job growth, the southern European countries are helping to offset Germany's weak performance. But will it be enough? As the United States economy appears to slow, China loses momentum, and Brexit looms, can Europe dodge a downturn? The question may be decisive for Europe and crucial for the United States. The European Union and US are each other's biggest trading partners. A slowdown in Europe would be another drag on the America's economy, at a time when bond markets are already flashing warning signs. Most economists are not predicting a Europe-wide recession, but they are worried about the prospect. There is little chance that the European Union can thrive when Germany is sickly. If the largest member state is affected, said Katharina Utemul, senior economist at the German insurer Allianz, I'm sorry if I mispronounced that, this will also start to weigh on the euro area as a whole because of the close economic relations. Should Europe sustain more economic body blows, like an ill-deal Brexit, a debt meltdown in Italy, or an escalation of the trade war, Ms. Utermuller said, the risk of a recession is rather high. Some economists are more pessimistic. Euroland is headed for a recession, Carl Weinberg, the chief international economist at High Frequency Economics, a research consulting firm in White Plains, New York, said in an email Friday. All of the writing is on the wall. Mr. Weinberg cited numerous indicators of trouble: less production at Eurozone factories, surveys showing increasing gloominess among business managers, and a contraction in global trade. The perilous state of the Eurozone economy will be an early test for Christine Lagarde when she succeeds Mario Draghi as president of the ECB in October. So it's interesting, Christine Lagarde was head of the Monetary Fund, but now she's going to head the central bank, which you'd think is actually going to be a step down, but whatever. Mr. Draghi is expected to announce a new package of stimulus measures next month, but Miss Lagarde will have to consider what the central bank can do if the situation gets worse, because the ECB is completely out of ammunition. Interest rates are outright negative. They already have extensive bond buying programs and other financial measures that are already having all the effect they're going to have on the economy. And the euro is actually appreciating versus the yuan because China is devaluing the yuan. So the ECB is completely out of ammunition and has nothing left to do. When Germany's official statistics office reported on Wednesday that the economy shrank 0.1% in the second quarter, shockwaves rippled through the stock markets around the world. The reaction reflected the degree to which Germany sets the tone for the continent. Germany has the Eurozone's biggest economy, accounting for more than a quarter of the bloc's output. It has the most people, 83 million, and the most workers, who help stoke nearly every other country's economy. The list of European Union countries that count on Germany as their number one trading partner is long. It includes France, Italy, Netherlands, Belgium, Slovakia, and Sweden. Well, except for Slovakia and Sweden, all those countries neighbor Germany directly. And even Slovakia and Sweden are only one country over, which is funny because Germany is like not only economically central, it's geographically right in the middle of the continent, and surrounded on almost all sides by neighbors. And even on the north, Scandinavia is just right over the Baltic Sea on the other side. Well, that's a geographic digression. The relationships sometimes border on dependency. Germany accounts for 27% of Poland's foreign trade, another neighboring country to Germany. Britain, Poland's number 2 trading partner, accounts for only 6%, according to the World Bank data. Yeah, so Germany is really central to the European economy. Suppliers throughout Europe earn much of their revenue by selling to big German manufacturers like Daimler, Siemens, and Thyssen Krupp, but those companies are struggling. So if a German recession cycles through, it might actually have a knock-on effect on demand for countries that rely on exports to Germany. Daimler, the maker of Mercedes-Benz cars, has issued 3 profit warnings since October. Siemens, whose products include high-speed trains and equipment for oil and gas producers this month, reported a 6% decline in net profits. And the ratings firm Moody's downgraded Thyssen Krupp's debt further into junk this week, an indication that the giant steelmaker is considering a default risk. As it strains against the German downdrift, Europe is battling a host of other woes. High on the list is Italy, which has a stagnant economy. Yeah, I just did a video on their economy. It really hasn't grown in 20 years. And it's just gotten worse, so I don't see an end in sight anytime soon for its economic troubles. Though who knows what will happen in 5 years. High on the list is Italy, which has a stagnant economy, an unstable government, and one of the highest debt burdens in the world, giving it the potential to touch off another financial crisis. Another risk is that Britain will leave the EU without a deal, with Brussels creating chaos in the flow of goods across the English Channel. Car sales are plunging around the world, threatening an important source of jobs in countries like Italy, France, and Slovakia. Yeah, actually the car industry in Italy and France has been in the decline for a long time. I think Italy and France only produced like a quarter of the cars, or a third of the cars they did at their peak. But that's another story. Anyway, the biggest squeeze comes from the trade war. Trump's tariffs on a range of Chinese imports and on European steel and aluminum have disrupted supply chains and profoundly unsettled managers who make decisions about how much money to invest in a new factory space and how many people to hire. Germany is especially vulnerable to trade tensions because exports account for almost half of the country's gross domestic product, and it's most sensitive to downturn in the auto industry because vehicles are the country's biggest export. Sales of German cars have slumped as Chinese buyers pull back. I mean, German car exports only account for a very small portion of Chinese car sales. The vast majority of domestic sales are produced in China. And as China develops, and companies like Volvo further invest, more high-end cars will be made in China, and I think the portion of German cars imported will decline further. Which is all part of how China is going to be moving up the value chain, and eventually producing domestically everything it imports from Germany. So even in the long run, if China weren't in an economic trouble, it would still stop buying German goods, and Germany will still be out of luck in that area. So even if China weren't immediately slowing down, over the long run Germany would still be in big trouble because of its dependence on exports to China. So even if this weren't happening, Germany would still be in almost as much trouble very soon. It can be difficult to gauge how deeply other individual economies are rattled by the trade war, but the latest numbers across Europe, released on Friday, contain troubling signs. Eurozone exports fell 5% in June, the European Union's Statistical Agency reported. Trade accounts for about one-third of the bloc's gross domestic product. Eurozone growth has already been meager this year. The 19 countries in the currency bloc collectively grew 0.2% from April through June. The EU, which includes the Eurozone, plus 9 other countries, recorded the same rate. Spain was one of the best performers, registering growth of 0.5% compared with the previous quarters, which helped balance out Germany's 0.1% decline in output. but Spain and other fast-growing countries like Denmark and Finland are not big enough to replace Germany as Europe's economic locomotive. Yeah, Finland and Denmark were among the countries that were doing very, very badly when Germany was doing well. And that's often overlooked, or forgotten about. Even if Europe manages to avoid 2 consecutive quarters of declining output, the technical definition of a recession, no one expects growth to be particularly impressive. The slowdown in growth is everywhere in the Eurozone, more or less, said Georg Kramer, chief economist at Commerzbank. There is no decoupling. Well, that's pretty much it. It's just basically an article describing what a central role Germany has in Europe's economy, and wondering how long Germany can continue to do badly before it really affects the rest of Europe and takes the continent down with it into a slowdown. Though again, it might take a quarter or two for bad results in Germany to cycle through into bad numbers and exports from the neighbors into Germany. Please share this video with anyone you could think of, like it, leave your thoughts in the comments, subscribe to my channel, and hit the notification bell.